If you ever look at the stock market as being more than just a vehicle for your retirement plan, a 401k, or a Roth IRA, and you want to take things to the next level, one of the things that you'll hear very quickly is you need to develop a strategy. Well, what does that mean? If you don't really understand much about the markets, how do you know what kind of a strategy that you want to come up with? Of course, we all want to make money. We want to be successful. We want to be profitable. But how do we actually get there? Everybody wants to do it, but very few actually succeed. If those are questions that you have, stay tuned. I have some answers for you. Before I start on this video, I want to remind you that I have a free workshop that is available to you by clicking on the link in the description box below this video. It's about 90 minutes long. I'm not trying to sell you anything. I'm just trying to offer you some insight and different ways that I think, and to help you possibly think in different ways yourself. The coverage includes a lot of different areas. Of course, I talk about the financial markets in general and a little bit about the stock market itself. I also cover sports. I'm a big fan of sports. Music. I've been playing music since I was very young. And I also talk about professional and personal relationships. The goal of this workshop is to help you to think in either new or different ways, as well as for you to get to know me and my style. One of the things that you'll learn about very quickly in the program that I offer is developing a strategy. You have to have a plan. Think of it like getting into a car and you haven't mapped it out. You don't know where you're going. You just step on the gas and just drive. You might end up in a field somewhere. You might hit the broadside of a barn. You might end up in New York. You don't know. There's no plan. You're not controlling anything at that point. You're just letting everything else control you. Developing a strategy helps you to take control of things and then tweak this and change this as you need to modify things and then fit this to your personality, and you'll come up with a very successful strategy. But every strategy is going to be a little bit different for each person. So there's an almost infinite number of strategies that can be implemented. You don't invest the same when you're 20 and single that you do when you're 60 and getting ready to retire. And then in the middle of your life, when you're starting a family and have a mortgage and building your career, you invest differently during all of those different phases. At least I hope you do. You should be. So we need to adjust things based on where we're at in life. But if I was to take 100 investors or traders and line them up, ideally, no two will have the exact same strategy. We're all trying to accomplish the same thing, but we all might do it in a slightly different way. That's one of the wonderful things about the stock market is you can tailor this to yourself. That's also one of the drawbacks because a lot of people have no idea what to do. Where do I start? And so we fall into this trap of having other people tell us what to do. And instead of developing a skill, we just blindly follow them. We're zombies at that point. We're being brainwashed into what we're supposed to do. If we had to break off and do this on our own, we wouldn't have any skills to do that. So each strategy will be based on different time frames, and then I look at these a little bit different than other people might. I look at the short term as days to weeks, intermediate term is weeks to months, and long term is months to years or decades. Other people might have slightly different definitions of what is your time frame. Do you want to just look at the long term? Do you want to implement some intermediate term? Or do you also like being able to work on the short term? You can do all of them. You can mix and match. What markets do you want to look at? Are you interested in the stock market? Do you like the cryptocurrency market? How about the Forex market? What about the futures market? What about bonds? There are lots of different opportunities out there to fit the particular personality that you have and the goals that you have. Back in the late 1990s, everybody was getting involved in the stock market. Why? Because of the dot-com boom. Then everybody got out of the stock market. And I'm using everybody as a very generic term because of the dot-com bust. Then, 2006, 2007, it seemed like everybody was in the housing market. What happened in 2008, 2009? Everybody got out of the housing market. A lot of people were drifting into the gold market in 2011, 2012. Then when it really started to correct, a lot of people got out of that market. We have a lot of people getting into cryptos right now. As I record this, the real big plunge down hasn't happened yet. But if it does, you're going to see people completely washed out. They're going to lose interest. They're going to turn and go away. One thing that I used to do as a teacher is I would take 3 or 4 days near the end of the school year and I would play a game called Stocks and Bonds. And the game was pretty much geared toward, you'd roll the dice and it'd say this stock went up, this stock went down, and people had, it was like Monopoly money. They would buy, and then when they thought things got high enough, they could sell and they could use that money to buy something else. Well, near the end of the game, since we covered this in about the year 1929, I would just have everything crash. Yes, I manipulated things to make that happen. And it just amazed me how quickly everybody lost interest in the game. By the time we were done, nobody even wanted to play anymore. They liked the idea of winning and they were all excited about that. But when they started to lose, they just like, forget this. This is not fun. That's what happens in the financial markets in real life too. People are all excited when things are screaming to the upside. They get in, usually just the wrong time. Things turn, come down. They lose a lot of their money. They think, oh, this is rigged. I'll never make any money at this. Only the fat cats on Wall Street are going to make any money. I'm going to go off and do something else. And those things need to happen about every 8 to 10 to 15 years because we have to wash out the system, basically. Then what vehicles are you going to use? Are you going to use stocks? Are you going to use bonds? Are you going to use futures contracts? Are you going to use options? There's a lot of different opportunities that are available to you. What tools are you going to use? Are you just going to rely on somebody else to tell you what to do? Then please stop listening to this video right now if those are your intentions. If you're like most people and you're listening to this, you have no intention whatsoever of just blindly listening to other people. Unfortunately, the reality is quite different. We think that we're independent and that we're going to learn this and we're going to make our own decisions. That's the American way. That's the American spirit. But when it comes to the stock market, it's like we all turn into wusses and we want somebody else to tell us what to do. You need to invest in some tools. What are those tools going to be? Are you going to read some books? Are you going to watch some videos? Are you going to take some classes? Are you going to invest in some software? Are you going to take some time to actually develop this skill? If you're going to use a tool, you need to learn how to use that tool. You don't just jump into a car when you're 5 years old and automatically know how to drive. You have to be trained on how to operate it the correct way. And even then, a lot of people don't. What position types do you want? And you may not understand that. There's the ability to go long, which means buy low, sell high. And there's also the ability to go short, which is sell high and buy low. You may not understand what I just said. Just stick with what you understand, and then you can add other things to your overall strategy as you learn them and understand how they work. Let's talk about trying something new. New investors and traders should start with 1 or perhaps 2 strategies. If you're brand new to this, welcome. It's an exciting world. I've spent over 25 years studying the financial markets, and there's something new and exciting to learn about every day and to see that never happened before. Even though a lot of things do repeat themselves, they never repeat themselves in exactly the same way. And just when we think we have everything figured out, the markets go and do something that we weren't anticipating. To me, that's what makes it exciting. But you may want to start with just something kind of simple, just something that you can understand, develop that, and then build on that. When I first started working with computers, I didn't even know how to turn it on. And I learned just enough to kind of get things going a little bit. And then a week or 2 later and a month or 2 later, I'd learn a little bit more and I would just build and build and build on that skill. And if you look at most things in your life, you didn't start off at graduate level courses when you were 6 years old. First, you were taught the very basics and you had to get those down. And then as you go through school, the work gets more and more challenging up until you get to the point where you're into a university and you're getting a higher level degree. And then you get into the real world and realize I wasn't taught anything I really need. And so then you have to relearn everything the way the world says you should. And that can take time to develop. The same thing is true with the stock market. You don't start off by just being successful right off the bat. And if you do, you're probably not going to last very long. That's one of the worst things that can happen to somebody is to have initial success and you think this is easy. I've got this all figured out. man, my future is all planned out. That boat, I'm already going to go buy it now. I'm going to pay off my mortgage. I'm going to send my kids to the best schools. And then you realize, the market didn't do what I thought it was going to do. And instead of being on the offensive, suddenly I'm on the defensive, and now I'm in panic mode and I don't know what to do. So the idea is to start simple and then develop it into more complicated things as you develop the skill. So it's better to become an expert on a few strategies rather than knowing a little about many strategies. The old saying, jack of all trades, master of none, that's really true when it comes to the stock market. You may have a basic understanding of stocks or bonds or futures or Forex or cryptos, but if you don't really hone in on one of those, yeah, you might have some success at different points, but overall, you're probably not going to have the kind of success that you're really seeking. Even those with market experience may need to look at adding new strategies or modifying existing strategies. Some of the vehicles that I talk about now didn't even exist 10, 15, 20 years ago. The basic program that I teach based on the S&P 500, when I first developed it, it was based on mutual funds. Well, then we had the growth of ETFs. And then those ETFs became popular, and then the options on those ETFs became popular as well. We had monthly options, and then we had what are called leaps or yearly options. Well, over the last 5 to 10 years, there's been the introduction of weekly options. Just a few years ago, those didn't exist, and so those open up a lot of opportunities to us. If you're still doing things in 1998 style, you might want to relook at things. Now, if it's working, stick with it. That's great. If you want to potentially have higher returns and maybe even do better than you have been, you might want to look at some different strategies that you didn't really consider before. Don't be afraid to experiment. Try new things and or consider what-if scenarios. Now, on paper, pick up some books about markets that you don't know about. Watch some videos. Take some classes. Go to some webinars about things that you don't really understand. You might find that you have an interest in that. Or you may do enough research and go, this just isn't for me. I don't really like this. If you do know the market that you like, what about trying some option strategy that you never would have even considered just a few years ago? You might find that you have the aptitude for it. You may be very successful at that strategy, or you may find, nah, that's just not for me. It's not what I like to do. How are you going to learn unless you try? For different members that I have in my program, I publish different types of strategies on the website, and I teach these in the classes that I offer. One word of caution. There's a lot of words of caution that I have. This is just one of them. It's easy to want to make the financial markets appear black and white. One of the things I hope all of you learn quickly, if you haven't already, is we live in a gray world. Things are rarely ever black and white. Just as an example, over the last few months, I've been hanging out in a public free chat room with all these people who are sure they're going to get rich trading Bitcoin. You would not believe the lack of information, the arrogance, the attitudes, the dogmatic statements that people make. All those people are going to lose eventually. They may have some short-term success, but they're gambling. They're not applying a strategy. They're just saying, yes, we're going to 35,000. We're going to 100,000. If they knew that, why would they be saying that in a public chat room? And why are they even doing this? They should be the head of finance for America if they really think that their attitudes are going to be right. You have to learn a sense of humility when it comes to the markets. We're not always going to be right. We're not always going to be wrong. We're going to be right a lot more than we're wrong, but we have a plan in place to take advantage of things when we're right, and then to limit our losses when we're wrong. And then we just shake the dust off ourselves and move on to the next one. We don't dwell on it. We try to learn what we can from it if we did end up making any mistakes. But you can still do everything right in the financial markets and still lose. Unfortunately, you can do everything wrong in the financial markets and still win, at least in the short term. And that gives you just enough to justify that you're doing the right thing, so you keep doing the same thing over and over, and pretty soon you're wiped out. But don't think that everything is black and white. You cannot apply cut and dry conclusions to the stock market. There's always some gray. When I do my videos every day, there are always warning signs, even in the best of environments. When we're going down, there are always positive things to look at, even in the worst of environments. We just have to take all of this together and reach the best conclusion that we can, having backup systems in place for when we are wrong. This can be very dangerous if you want to make things black and white. You're going to get wiped out. That's a terrible attitude to have. The stock market is very good at giving people humble pie, and I talk about that in my workshop. Just about the time you think this is really easy and you've got it all figured out is when you're going to have the biggest loss you ever could have imagined. And life seems to work that way. So a healthy respect is always needed. And I talk about that in the workshop too, that being presumptuous is probably one of the biggest faults and one of the biggest problems we have with experiencing consistent success. So the markets are almost always gray. There will be warning signs that can appear to contradict the desired outcome from happening. There's a saying on Wall Street, the markets like to climb a wall of worry. Things are never black and white. You can look at it in hindsight and go, oh yeah, everything went up. That doesn't do you any good. We need to make decisions right now, and then where do we go from here? And if there's a lot of gray on the horizon, it can be really hard to make decisions. And we paralyze ourselves, and then what a lot of people end up doing is nothing. They just become full-time market watchers instead of participants. At any moment, it's necessary to consider these three things. What happens if the S&P 500 goes up, or your stock? Now, I'm focused on the SPX because that's what I teach about, is the S&P 500 and all of the hundreds and thousands of instruments that are attached to that. If we analyze things and think, okay, the market should go up, and it goes up, great, then we're right. What happens if we thought things were going to go down and it turns on us and starts going up, and now it's going the opposite direction of the way we thought it was going to go? What are you going to do? What happens if the S&P goes down? You got in long hoping that it would go higher, and now it's falling. What are you going to do about that? And relying on the lottery and prayer are not good answers to this. You have to have these things defined before you even get into a position. Whether it's a trade that lasts less than a year or an investment that lasts longer than a year. You want to know, when are you willing to admit that you were wrong? And then this is the one that can really throw people. What happens if things go sideways? We spend anywhere from between 60 to 80% of the time really not trending. I mention this over and over in all my videos. There is a randomness to the market, which means it can just shoot in any direction at any given time. There is also a non-randomness to the markets where things do move in patterns, either up or down. But there's also a significant amount of time where there's really choppiness going on. There's really no defined trend. What are we going to do if we get in hoping that something's going to go up and the markets just tread water going sideways? What are you going to do about that? Anything? Just hang on and hope for the best? That's not a strategy. You need to have these things figured out before you even get in. Another problem that we often make is second guessing. There's plenty of room for woulda, coulda, shoulda. We can always look back and say, well, if I just bought Apple at 7, and you could have bought it at 7 at one point, you'd be sitting really good right now. But when it was $7 a share, nobody wanted it. That's why it was $7 a share. We can go back and say, if only I had done this, if only I had done that. There is a healthy side to that where we learn and say, okay, this is what I did wrong, and now next time I will know to do things different. But if you just say, I got out at 22 when I could have got out at 23, that's not very healthy. If you're just trying to get every little penny of profit that you can, and you're not just happy with the guidelines that you set up before you even got into that position or investment, you're going to drive yourself nuts. And that's not a healthy way to do things. So there's that balance between evaluation and implementing what you learned and just saying, oh man, if I just hung on a little longer, things would have been so much better. As much as possible, try to avoid this. That's why I say try to avoid this, because we can't ever completely eliminate it. We're trying to make long-term decisions in real time, and sometimes we're going to be wrong. And sometimes we're just going to go with a gut instinct or what we think is going to happen, or maybe we've rode this long enough and we got into this investment and we saw a loss for a significant period of time, and now we get back to break even and we're just happy to be out and done with this. Well, and after that, it just shoots to the moon. And if you had stayed in, you would have been looking really good. but initially you wouldn't have been looking good. It's really impossible to eliminate that completely, but we try to do this as much as we can. The main idea is to learn from each trade, both the winners and the losers, especially the losers. Believe it or not, we really don't learn that much from our winners. We think it's easy. Some of the best trades and investments that you'll ever have will seem to be the most effortless. Some of the most difficult ones will be the biggest losses that you have. It works kind of counterintuitive in that way. But we do want to look at our winners. That's why I get together with my members and we say, okay, what happened this week? Anybody initiate any new positions? Okay, and we cover that. Anybody close out any positions this week? And we talk about that. Was it a winner? Was it a loser? What'd you do right? What'd you do wrong? And people can share as much or as little as they desire. It's just an opportunity to be able to share things. Keep the things that work while modifying or discarding things that don't. And that sounds very simple and like, duh, tell me something I don't know. Well, how come almost all new investors quit and lose? If this was so simple and easy, they would be doing that. We might know it in our head, but we don't know it in our heart. That doesn't come out when we're in the heat of the battle. These are hard disciplines to learn and even harder to master over the long term. Developing a strategy is a very personal thing. As I said, every person is going to be a little bit different, and if it's not, something's wrong. In the program that I teach, I sit down with each person. I say, what do you want to do? How can we develop a strategy that works for you? And I've turned people away. We've sat and we've talked for 2 or 3 hours before, and I said, you know, the kind of thing that I teach, I really don't think it's for you. You need to be doing something a little bit different that really doesn't involve me. I'm grateful that we had a chance to talk, and I'm grateful that I was able to help you, but I don't think I can. Other people say, man, this is just the thing I need. I'm being given a lot of guidance. I have a lot of coaching, but yet I ultimately make the decisions. And now, as I go through this, I know that there's a core of people that I can talk to and I can share my ideas with. Some of those ideas will be good. Some of them will be bad. You can evaluate those and then move on. So let's look at some of the different time frames. Do you want to be a day trader? If you do, stop the video right now. This program is not for you. I do not teach day trading, nor do I even endorse day trading. It's not for me. Day traders are necessary because they add a lot of liquidity to the market, and a lot of people really enjoy that. That's one reason why I don't trade the Forex market and I don't trade futures contracts, because you pretty much have to day trade since you're using such highly leveraged instruments. But if you're looking at day trading stocks or even options, go somewhere else. This is not really what you want to look at. Now, please watch my videos and I'll give you lots of reasons why, and I may be able to show you why I have reached the conclusions that I've reached. And if you disagree with me, let's talk about it. I'm cool about that. Let's set up a time on Skype or Zoom and talk about these things. I love doing that. So trades for day traders last anywhere from a few minutes to a few hours. The idea is that by the time your market closes, you're all the way in cash. You don't carry anything over until the next day. And a lot of people like that. It can be very stressful. It can really take its toll on your health because you have to sit in front of a computer all the time, which some of you may like, but you're not getting any exercise. You're usually relying on other people. You're so tuned into what's going on. Life is passing you by. That's just the conclusion that I've reached. A lot of people watching this will disagree with what I just said, and that is fine. All positions are then exited by the end of the trading day. You don't carry anything over. There's also a thing called a swing trader, and that's more of the first level, the shortest term that I teach about, where you're willing to go long, you're willing to go short. Some positions may last days, usually weeks, sometimes even months, but you just set up your strategy, you ride that, and when the criteria is met, you get out. You take that money and then you look for the next opportunity, whether it's long or short. So short-term investments that can last either days, weeks, or even months. Personally, I like the intermediate term the best. I like being able to ride things for weeks or months. But that's just how I feel. There was a period of time when the markets get really choppy when you can't do that. You can't really invest in trends. You have to switch your strategies around and implement different strategies that are much more short-term. You're still getting good returns, but now you have to babysit things and be a lot more involved than if you're more intermediate term, where you don't have to watch things as closely. Or if you're long-term, that's great too. You still don't have to watch things all that close, but you need to keep in tune with what is happening. Swing trading can also involve going both long and short, as I mentioned, where the market goes up or the market goes down. Then you have an investor. These are long-term positions held for months to years. Now, from a tax standpoint, at least currently, an investor is somebody who holds a trade longer than 1 year, and that's mainly for tax purposes. If you hold it less than 1 year and you get rid of it, that's short-term capital gains. If it's longer than 1 year, that's long-term capital gains. That changes all the time. So we have to pay attention to what the tax laws are and how they are being changed. And the program that I teach, it's called the SPX Investing Program, endorses implementing strategies on all time frames, but highly recommends not day trading. You won't get any personal support from me if you're a defined day trader. But if you're short, intermediate, or long term, I'll work with you as much as you want to be worked with. So I teach different strategies based on all of the other time frames, but I avoid day trading. Now, does that mean I ever day trade? I have before. I got into a position early in the morning. The position was initiated and I was able to hit my target by the time that market closed for that day, but that was not my intention when I got into it. Yes, I've had a lot of trades work out that way, but that wasn't the plan from the beginning. I had a target that I wanted to reach, and when that target was met, I exited. It just so happened that it ended up being on the same day. I was willing to ride that position for weeks, if not months. So let's look at some of the different markets. What specific markets interest you? Stocks? That's a huge market, and that's mostly what I focus on. I've been involved in all these different markets. The typical rule is when you're trying to grow a portfolio, you invest in stocks because they tend to do very well over the long term. And then around the time you're getting ready to retire, you take them out of stocks and put them into bonds, which are interest bearing, and then you use that interest as part of your retirement income. What about options? Some people love options and have a real interest in that. Other people think they're of the devil and should be avoided. It's like a car. They're not good or evil in and of themselves. They can be used to help people. They can also be used to hurt people. What about the futures markets? Now, I personally don't deal a lot with the futures markets. I watch them all the time, but I don't actively participate in them. What about gold? What about different currencies, whether it's currency futures that trade in Chicago or the Forex market that trades pretty much 24 hours, 5.5 days a week? And then what about cryptocurrencies? That's all the rage right now as I record this. Is that going to be the rage a year or 2 or 10 from now? We really don't know. And anybody that says otherwise has no idea what they're really talking about. Are you going to look at stocks? If so, do you want to invest in individual stocks? Now, I don't do that. I look at indexes. I think that's a much better approach to take, and I have lots of other videos that I posted that explain why I feel that way. If you're going to look at options, do you want to use options as hedging or as a form of protection? I have other workshops that I give where I talk about using options to protect yourself. Similar to having auto insurance or house insurance, where if something happens, the insurance money can be used to replace the value of what was lost. We can do that in the stock market. Or do you want to use options as capital gains? You have the ability to have a 50, 100, 200, 500% return in some of these option contracts. Doesn't mean you're always going to do that, but the opportunity is there, and a lot of people are really enticed into this market because of that. Or do you want to use options to produce income? As I mentioned before, the markets are always changing, and there are opportunities to make weekly. You can even make it more than once a week now. There are different kinds of weekly options that you can use. There are monthly options. There are quarterly options. There are yearly options. You can stagger these over a period of time so that you're generating consistent income as your portfolio grows. And then you can take that and either use that to live off of or use it as a form of compounding to have even larger positions and allow it to grow that way. Please watch my compounding video when you get a chance. Then indexes. What indexes are you going to look at? The S&P 500, the Dow Jones Industrial Average, the NASDAQ 100? I look at all three, but the one that I really focus on is the S&P 500. And I have other videos where I talk about why I think the S&P 500 is the best. Are you going to look at ETFs, exchange-traded funds? They're kind of like mutual funds, but they trade like stocks. Where with mutual funds, you can only get in after the market closes, based on a thing called the net asset value. Where ETFs, you can buy it right when the market opens and sell it right before the market closes, because it buys and sells just like a stock. And they become very popular, and in a lot of ways, they're even more popular than mutual funds now. And the universe of ETFs is growing almost exponentially. I have some videos on ETFs if you would like to learn more about that. Do you want to look at the SPY, which is the most popular ETF in existence? This is an ETF that focuses on the S&P 500. There are ETFs based on the Dow called the Diamonds. There are ETFs based on the NASDAQ 100 called the QQQs. But the one that has really risen to the top because it covers 505 stocks is the SPY attached to the S&P 500. There are also sector ETFs. The S&P 500 is broken down into 11 different sectors. You may want to focus on one of those areas in your investing. And I have a video on S&P 500 sectors or other ETFs. There is just a whole universe of ETFs now, both in the US, emerging markets. You can get an ETF on Germany or on Russia or on Asian countries. You can get ETFs on industry groups. So you can really tailor this to what your personal area of interest is or possibly your area of expertise. And then are you going to look at mutual funds? There's as many mutual funds out there as there are ETFs, roughly. We're starting to see ETFs surpass mutual funds as far as popularity, but mutual funds still perform a very important function in the financial markets. They've been around a long time, and a lot of people have built their wealth using mutual funds. And I have a video on mutual funds that you can watch. So the SPX investing program, which is what I teach, and the program that I developed, it teaches strategies using ETFs, mutual funds, and options together. Now, you may not like options or you may not like mutual funds, so you focus on the ETF part. Or you may not like the ETF part or the mutual fund part, so you focus on the options. See, you're the one that can tailor this to you and do the things that are best suited for you, your lifestyle, your personality, your goals, and your tolerances to risk. So what are some of the different tools that you can use? We have to use some kind of tools to make decisions, even if you're listening to another person, which I would highly recommend against because there are just no good ones out there. They think they are, and they may even have a short-term good track record, but please don't fall for that. And if you do, I'm sorry for you. Please come to me and I will teach you the skills. It may take longer, but when you grow into developing a skill that you can be proud of, that you can have consistent success with, you're going to be a much more well-rounded person for doing that. What kind of charting software are you going to use, if any? I have 3 different charting software packages that I use and probably 6 others that I consult on a regular basis. I use a thing called technical analysis, and these draw charts, both in the short term, intraday, where 1 bar might be 10 minutes. Other charts I look at, 1 bar is a month. Another chart, 1 bar is a year. So I have lots of different charts that I look at, and I have different types of software that I use. There's a thing called Thinkorswim, TOS, and this is put out by TD Ameritrade. If you want to look at some of the software that I talk about, look for the video that I posted about paper trading. I talk about virtual trading, which uses software, and I go into more depth about the different software out there and the kind of software that I have found to be good for me. There's a lot of good software out there, some of that I've never used. I'm just teaching what I'm comfortable with and what I've used for a long period of time. There's also a thing called the Tastyworks platform. These guys focus a little bit more on options. The people who developed Tastyworks first developed Thinkorswim, then they sold that off to TD Ameritrade, and now they developed another platform called Tastyworks. And some of you watching this video are going to be very familiar with both of these. Then different websites, and this is not an exhaustive list, and it changes quite a bit. I keep a more accurate and up-to-date list on the spxinvesting.com website. And I also talk a lot about the different information sources in the videos that I produce for the members. Stockcharts.com, the charts that you see that I use in the videos, they all come from stock charts. You see the little dollar sign at the end? That means they're not free. There are some free aspects to stockcharts.com, but to really get in and use the power that it has available to you, you're going to have to get a paid membership. There's also Sentiment Trader. Very, very unique. Jason Gepfert. He's been around a long time, has developed a lot of really unique studies. I don't show those charts in my videos because of copyright issues, but I use a lot of the information that he teaches, and I form that into the commentaries and analysis that I apply each day. There's Bloomberg.com. Some of Bloomberg.com is free. Some of that you're going to have to pay for. They have live channels on YouTube. There are other ways to be able to access their information. There's also Bloomberg Radio. It's a really big financial channel, and you can get a lot of good information from them. Now, if you're more interested in geopolitical events, one of the nice things about this next site, stratfor.com, and it's not free and it's not necessarily cheap, is they have no agenda. They're just telling you information as it's happening. It's the way CNN used to be, when they would just tell you what's going on, and then they had this idea, at least at that time, that people could think for themselves and reach their own conclusions instead of being told what to do. Stratfor does that. They're just reporting things as factual as they can. We're not taking it as either good or bad. We're just putting it all together and then saying, okay, this is where we evaluate things for right now. Now that deals more with geopolitical events. They don't talk an awful lot about financial events. But every month, what I do for my members is I create a video about what's really going on in the world. And one of the resources that I rely on heavily is stratfor.com, among lots of other sources. There's also the Wall Street Journal. I've been a long-time subscriber to that. I not only subscribe to the Wall Street Journal, but to Barron's and to Market Watch. They're all three part of the same company now. And there are lots of other ones. There's The Economist. There's the Financial Times, which if you want to get more of a UK slant on things, there are a lot of different publications out there. Some of them are garbage and some of them are helpful, but the bottom line is you have to reach your own conclusions. Because we live in a highly politicized world now where things don't come about from a factual or non-factual standpoint. It comes about from an ideological standpoint. And we don't want to use those kinds of things when we're making decisions about our investments. We just want to know what in the world is going on and what do we think is going to happen next. We don't really care if it has some political implications or not. We just want to make the best decisions we can given the information that we have, and we want that information to be as truthful and as unbiased as possible. I'll come up with my own conclusions, thank you very much. And I hope you listening to this, that you also have that conclusion. There's also Yahoo and different Google financial websites. The public group that I was talking about where I follow the cryptocurrencies, that's at investing.com. There's a lot of really good free resources out there. And I try to list those. And that's one of my promises that I make to my members is I can't guarantee you success, but I can guarantee you that I will work as hard to find the best information that I have, and that which I can present to you, I will give you. Now, there are some information sources that I get that I mentioned, like Jason Gepfert. I can't show his stuff because he has it copywritten. There are other newsletters that I get where I don't really show you that information because of copyright issues. And I believe in doing things the right way. But it doesn't mean I might not use some of their analysis and to reach the conclusions and to share with you some of the information that I want to present to you. There's also the SPX investing program. Yes, this is my program. I think it's the best program in existence, and it's even getting better all the time. So that's one really good source of information, and it serves an awful lot of people. And there are certain times when I open it up to have even more people become involved. It's a one-man operation. I do it all myself. And so I get overwhelmed and I want to be able to study things and analyze things, spend my time developing curriculum and teaching you things and being able to have 2 or 3 hours Skype conversations with somebody. Well, when a lot of people get involved, I get overwhelmed and I can't do that anymore. And so then I shut the doors and then I wait until there's an opportunity when I can expand the membership. It's not free, But through that, I have daily videos that you can watch. There are weekly video updates. I have workshops, and these are broken down into how long they are. So I'll have a seminar, a workshop, and some kind of a supplemental video in addition to the other videos that I already create. And then an updated list of useful tools is maintained at spxinvesting.com. Now, this is summer of 2021. As I record this, my website is down. I'm not accepting any new members right now. I'm rebuilding everything, and I will make an announcement when the website is relaunched again. I'm just totally rebuilding it. What are the different kinds of positions that you're going to take? Do you want to go long, meaning buy low, sell high? That's when you're hoping that prices will go up. Do you want to go short, where you can sell high and buy low? There are some people that only do that. They have their longer term investments in long positions, but then when they see trouble on the horizon, they may enter into some short positions to take advantage of downward movement, because markets tend to fall a lot faster than they climb. And the profits that they make when the market goes down can be used to offset some of the losses that they may have had in their longer term portfolio. You can mix and match this as needed. And you can do a combination of the two, where you're going both up and down and making profits both ways. See, a lot of people think that you can only make money if the market goes up. That's only 33% of possible outcomes. There's a 33% chance that it'll stay the same, and there's a 33% chance that it'll do the opposite of what you want it to do. So you're already outnumbered 2-to-1 right when you get into a position. So wouldn't it be nice if we could take advantage of that other 66% of the time? And in my program, you can. And then what are some of the different rules that you want to set up in your strategy? And this is very important, and you do not deviate from these rules. We set up our plan while the market is closed. We're not in the heat of battle. We actually write this down or fill it out in a spreadsheet, and we follow it letter by letter. We don't adjust things at the last minute. We're not good enough yet to do a lot of impromptu or a lot of improvisation. So each strategy should have 3 basic rules. What's going to be your rule for entering? And I have my opinions. I have my stances. I have a lot of students that follow the rules that I suggest for entering. I'm not going to mention those here. They're in other videos that I post that you can watch freely. What are your rules for keeping a position open? It's like, well, I don't know, until I make some money. Well, what kind of return are you looking at? Or maybe this position has some kind of a time factor involved. If you're using options, options only exist for a certain period of time. And you're going to have to do something about that. The same thing with futures contracts. And if you're going to go long and short, there are different rules that apply to you when you're hoping the market will go up than may apply to you when the market goes down. What are your rules going to be for closing a position? When you earn a certain percentage, let's say you get in at 10 and you want to make a 50% return, it goes to 15, boom, you're out. No second guessing, no, man, if I could have gone up to 17. No, we don't do that. We set these rules down. Now, if you're not happy with the results, or if you think you could have done even better, after this whole thing completes itself, then we go back and analyze and say, what would have been a better approach? And would I want to take what I've learned and apply that to my next position? And then doing a lot of testing. This is how you're going to learn. Any strategy should be tested before being put into action. Think of it like an airline pilot. You have lots of classroom learning that you have to go through. And then if you get through that, then they put you in a simulator. And if you get through that, then they fly you on a plane with no people. And then if you get through that, now you can finally fly a plane with people on it, but you're going to have other people with you in case you screw up. We should be applying those same set of criteria to investing. We start off by just testing something out. Then we may take the next step after that until we finally get to the point where we have confidence that we can implement this strategy over and over. And one of the nice things that really helps us with that is technology, where we can use a lot of the software that's available. We trade under real-time conditions, and we're doing everything the same, except we're not putting real money on the line. And that can be helpful. Now, there are people that disagree with that. They treat it like monopoly money and they think, I'm not really learning anything. You need to have really money out there before you can really learn what's going on. And there's some real truth behind that. But if you don't even understand what's happening, you shouldn't be putting any real money on the line. So this can involve, when you're testing, research and development, figuring out what kind of strategies work, what kind of strategies are available. Do I even understand this strategy? And then developing the strategy as it applies to you, and then doing back testing. As I record this, it's 2021. I come up with a new strategy. I may back test it to about 2001, because that's when we had the terrorist attacks, and the markets have really never been the same after that. Or I may back test it until we had the crunch back in 2007 and 2008, and then we finally bottomed out and came up out of that. But other people, they may go back to 1900 to test things. And then doing forward testing. That may not make a lot of sense to some of you, but once you feel that you have a strategy that you understand, you've researched it, you developed it as it applies to you, you've back tested it, it seems to work, now you need to forward test it. And that's by just taking it and playing with it from here forward under real-time conditions to see how well it would perform. Because when you're back testing, there's no emotions involved. A lot of times you're just setting the computer up and it does the back testing for you. And now you think, oh, this is a good strategy and now I'm going to implement this. You get into a real life situation and everything changes because now you're thinking, you're not following a mechanical system. You need to test this under real time conditions. And then you can use virtual trading software. I mentioned before, there's Thinkorswim or Tastyworks. There's other software out there. I learned technical analysis by using a software package called Metastock, and some of you may know about that. There's a lot of free charting software that's available to you at stockcharts.com, as well as other sites that you can go to. And some of you will use that and feel comfortable doing it. You may have some kind of charting software through your broker. Stick with what you're comfortable with. So thank you very much for taking the time to watch this video. I really appreciate that. If desired, please click a like or dislike. Leave any comments, either positive or negative, although they are moderated now, because I don't want scammers trying to sell things to people. Consider subscribing to this channel. I would really appreciate that. Please access the free workshop that I talked about at the beginning of this video. There is a public Facebook group, but we pretty much just focus on the S&P 500 for that. And then I also have an SPX investing blog where I write articles that are pretty much like the videos, but some people prefer to read things rather than listen to a video. So thank you very much, and I'll talk to you in the next video.